We have the Q4 results from Boeing, and we've got a big miss on the top and the bottom line. The bottom line, a charge or several charges resulted in a massive loss of $7.69 a share. The street was expecting a loss of 42 cents a share. But keep in mind, a number of analysts are hearing for the first time about some of these charges. They've speculated that we'd see some 787 Dreamliner charges, perhaps not to this extent. So you've got a loss of $7.69 versus a loss expected at 42 cents. The revenue coming in lighter than expected in the fourth quarter, $14.8 billion. The street was expecting $16.59 billion. But it did have positive free cash flow in the fourth quarter of $494 million. That is the first positive free cash flow quarter for Boeing since the first quarter of 2019. Let's talk about those charges. And the bulk of these revolve around the suspended deliveries of the 787 Dreamliner. They are taking two charges, one for $3.5 billion for customer considerations and delayed deliveries, and another $285 million for abnormal production costs. And by the way, those abnormal production costs have now been bumped up from a total for the program of $1 billion up to $2 billion, meaning that the total charges and costs for the 787, as they try to work out this situation with getting the inspections approved by the FAA so that the planes can be delivered, that now tops $5.5 billion. There's also a charge of $402 million in the fourth quarter for the aerial refueling tanker, as well as for $220 million for asset impairment. Add that all up, you get charges of basically $4.4 billion. The 787 Dreamliner is an issue that CEO Dave Calhoun addresses in a letter that has just been sent out to employees. And basically, he talks about the fact that they're working through this process to make sure that they get the right inspection process that will be approved by the FAA and that they can resume deliveries. In his statement to employees, Dave Calhoun says, "I view the financial impacts of this work as a long-term investment in a program that has significant runway ahead. We are taking the time now to ensure we're positioned well as wide-body demand recovers." Don't forget, we're going to be talking exclusively with Dave Calhoun coming up on Squawk on the Street a little after 9 a.m. this morning. You don't want to miss what he has to say. But that's the bottom line, guys. You have some massive charges in here, which is why you see the company losing $7.69 per share in the fourth quarter when the street was expecting a loss of just 42 cents per share. Oh, one other note, guys. We should point out that on the 737 MAX, they did increase production as expected in the fourth quarter, going from 19 per month in the third quarter up to 26 per month in the fourth quarter, and they say they are on track to hit 31 per month as expected sometime early this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.